Hello friends, in our last video we had suggested that somehow Bank Nifty is stronger in comparison to Nifty, and accordingly we saw that somehow bulls performed highly for Bank Nifty and managed to secure gains over 2% over its previous close, whereas for Nifty gains were less than 1%. Now let us check what is the current structure for Bank Nifty on a 30 minutes time frame. On a 30 minutes time frame, we can see that a long term moving average negative crossover is yet to take place, but practically looking at the current volatile market and moves, it is really very difficult to take a call or to take a trade on the basis of 30 minutes. So first of all, we shall check the structure on a daily chart. On a daily chart, really very convincing job is done by bulls by giving a bullish engulfing crossover, which I am talking about last two candle structure formation, which is a reversal candle structure. But this can be considered bullish only if at all follow-up move can be seen. Now, if we check overall structure, then it is in the favor of bulls, but RSI crossover is yet to be taken place, and this bullish engulfing follow-up needs to be made today. Today, on account of expiry, some volatile moves cannot be ruled out. Now, if we see 15 minutes time frame, then on a 15 minutes time frame, we can see that RSI is at a extreme level, means it suggests some euphoria kind of a scenario, and which can give its negative effect as well. In fact, if we try to study line chart, then we can see that a kind of double top formation with some exaggeration in RSI can be seen, which is again a divergence on the same time frame. Crossover yet to take place again on a long term moving averages, which is again considered as bit cautionary approach to be taken for the trading on a bullish side. Finally, if we try to see 1 hour chart and try to understand whether this was just a mean reversion kind of a theory, or bulls really managed to strike back. Now if we see overall structure, then yes, it was a kind of a mean reversion only. The reason being, Bank Nifty fell from about 38,800 near about levels to 36,400 near about levels, which was more or less 2,400 points or so, and then a bounce back to the extent of 50% of this swing was just a mean reversion on a higher time frame or on on a bullish side. Now if we try to see Fibonacci retracement and we try to plot it, then we can see that somehow bounce was more than 50%, but somehow trend reversal is possible only because we have seen a bullish engulfing candle, but follow up of that is must. So in the simple words, if at all bulls manage to give a close above previous trading session high with a green candle as a whole, then we can expect that temporary bottom is being made. If we see option chain data, then on option chain, please ignore this date. By mistake that was written 20th of January. Actually it is of today's expiry only. We can see that 36,000 36,500, 37,000, all PEs undergone a hefty additions. This is nothing else but a writing by biggies, and there are chances that if at all, as per the SGX cues and Asian market cues, if at all a gap down opening take place, then the first people to come into the panic will be 37,000 and 37,500 put options. Panic value for that is difficult to ascertain. The reason being, this is a monthly expiry, and most important point, ownership change must have taken a place, so exact panic levels will be really very difficult to find out. On a call side, if we see 38,000 undergone liquidation, 37,500 also undergone liquidation. In fact, many strikes undergone liquidation, so somehow CE writers took an exit in the last trading session. But on a PE front, if at all we open a gap down, then writers may come into the panic. Now let us again go back to our chart and try to ascertain or find what is practically today's support or resistance level. This is an hourly chart, and we will remove each and every indicator or an oscillator, and we'll just try to plot a simple Fibonacci retracement, and we'll try to find out what can be the trend reversal level for bulls and bears today. This is a retracement that we have drawn for the last trading session. By any means, if at all, bulls lose a grip at 37,250 and then at 37,090 near about levels, then chances are very high we may see flashes below 36,900 near about levels, and in fact we can also see moves up to lower level of 36,500 or so. How we have derived that level? That level can be considered by taking 76.4 ratio. 36,720 is the precise level, but as such this index is having a good volatility or good range in comparison to the Nifty, then moves till 36,500 cannot be ruled out if at all bulls failed to give some break to the bear's vehicle at 37,000 or near about levels. We request you all to manage the risk, or if at all it is really not mandatory for you to take a trade, stay on a sideline and save your hard earned money. Trading in the next weekly expiry of 3rd of February is also to be avoided. Reason being, we are already having a high IVs on account of a budget, and still budget trading session is yet to happen. Unnecessary moves, unnecessary volatility, zigzag or SL trigger may happen. So please manage your risk accordingly, and if it is really not mandatory for you to take a trade, then stay away, stay light and be audience mode only. We hope this video is going to help you to prepare at least your small quantity trading strategy or trade plan. See you soon with another video. Till then, stay safe, take care, bye bye.